How's it going, everyone? Mario here. It's been a while. Your boy has been feeling burnt out, so I took a break, and now we are back. Let's go over the analysis of SPY and QQQ and talk about what to expect leading into tomorrow. And we have CPI on Thursday, so we'll talk about what to expect from that as well. So without further ado, let's get started. So today was a pretty decent day. Volatility was up like 4.5%. S&P 500 is up like 0.5%. Nasdaq was up like 0.73%. It was a volatile day, but the numbers still respected. So let's go over the early thoughts and see what did we post to the members of the Discord and members of the Patreon, and we will take it from there. So the overnight lows on ES is at around 3,800. So that happened at around 3:30 a.m. in the morning. So the equivalent of it to the SPY is at around 378.40 and change. In the early thoughts, it was clearly mentioned, in case of a collapse or in case of a pullback, 378.44 or 378.50 around that zone is going to be important because that was the overnight lows in ES. If we do sell off, this is a place where we can find potential buyers. In case we find potential buyers here, the first level of resistance shows up at 380, the next shows up at 381.40, and a spike towards to 382.26. As a trader, you got to be aware of both sides of the tape. You got to be aware what to expect if the market is pushing up, and you got to be aware what to expect if the market is pushing down. Knowing the numbers play a pivotal role when you're a trader and you're active in the markets during the session. So, looking back at the session, the lows of the session is at around 378 and change. Our number was at 378.41, and which was around 3,800 in ES. And the highs of the day are around 385 and change, and our number is 385.30. So if you are an intraday trader, there were some numbers in between, like 382.55, which acted as resistance during the session. If you're a Patreon member, you must have gotten the real-time updates as the things were playing out. In the early thoughts, our highs of the day, which was at around 385 and change, and lows of the day was around 378 and change, the range respected pretty good. So you can go back and see the text and double check with the charts. We're not going to dive much deeper into this right now. But what we are going to talk about is the performance of IWM, which is Russell 2000. Even though the S&P 500, Nasdaq, and Dow 30 outperformed today, the underperformer of the day is IWM. Does it say something? I mean, usually when the small caps lag, it's kind of an ominous signal. It's not an indicator to buy puts on SPY or QQQ, but it's just something to keep in the back of the mind. And another important thing to notice is today the volatility is up like around 4.5%, and the SPY is also up like 0.5%. And I'm telling this because I saw a lot of text in the Discord and a lot of people texting me saying that why the VIX is up when the SPY is up. It happens. VIX is just an mathematical equation, to be honest, and it doesn't have any buyers or sellers, so the technical analysis doesn't work there. So saying that when the VIX is up, the SPY is down, the VIX is down, the SPY should be up, doesn't work like that all the time. There will be cases where you will see both VIX and SPY up at the same time. Example is today. We are getting CPI, which is in next 2 days. So volatility will be up. You can expect the markets to be volatile. So if you've been trading the markets for the past few months, you should have known by now that how volatile the sessions will be leading into the CPI events. So volatility being up, by every time I say volatility, what I mean is VIX. When the VIX is going up leading into the event like this, it makes sense. So SPY is going to move big. So the market is pricing in the expected move into the option chains. That's why the volatility, the VIX, is actually going up. And it is also pretty common to see people buying a lot of out-of-the-money puts as a hedge to their long-term positions in SPY, and that is another reason for VIX being up as well. So do not take short positions just because you see VIX is up. There are instances where both SPY and VIX are up. There are instances where both SPY and VIX are down. So, that being said, we have CPI on Thursday. Big moves can be expected. A lot of people are expecting a midterm optimism. If Republicans win, the market is going to rip. If the Democrats win, the market is going to go down. None of it is going to actually matter if the CPI print comes out hotter than expected. If the core CPI is already up and if it goes up even further, we will see a modest beat in the CPI. And if the market reacts in a bad way to it, we can see some serious downside. The risk to this rally, whatever we are having, is a higher CPI reading, which we might get on Thursday. If the market doesn't like it, it's gonna take like 2 to 3 days to reverse all the gains, whatever we made on SPY and QQQ. So that is something you have to keep an eye out for. I don't usually like to trade with news, but this is an important market moving event which every trader needs to be aware of. So leading into tomorrow, especially with SPY, the first level of resistance comes in at around 385.82, which was the highs of today. So if they break above it, watch out for the same moves to 387, and then they march towards 388 and run a test to 390 up north. And if they do fail, I expect them to come back down again to run a test to 378 to the downside, which was the lows of today. And if they break it, bears will take over and push this all the way down to 375 and change to the downside. If you're a beginner trader, volatility is going up. And if you're trying to mess around with SPY, be very careful and manage your risk, because it's going to take like literally minutes for your options to turn into a penny stock if you are wrong with the direction. Reduce your position sizing and move your stops a bit wider. So I've seen a lot of text from people saying that they're getting stopped out too early and then seeing the contracts moving in their favor. That happens pretty often in volatile markets. So instead of going long with like 10 or 20 or 30 contracts like you do when the volatility is low, just go long with 2 or 3 with an increased stop losses. So technically you're risking the same amount, but you're letting your contracts have a little bit of a breathing room, so like you won't get stopped out a bit early. And that being said, try not to gamble leading into CPI. You'll never know what's going to happen. Even though you predicted a hotter CPI print, you can never predict how the market is going to react to it. You can get a hotter CPI print and you can see market rally based off of that. You never know at the end of the day. And trading the unknowns, thinking or expecting something to happen without you having enough data to back it up, well, that brings down your chances of winning to 50-50, which makes it technically a gamble. So during binary events, manage the risk wisely. Check out the Discord, check out the Patreon, link is down below in the description if you need the real-time updates on SPY and QQQ. So, as always, take high probability trades, manage the risk wisely. I'll see you guys in the next one.